Welcome back everyone. This is an update on the oil market. WTI's price moved slightly higher in the past days, even though the price action for the commodity remains constrained due to the ongoing uncertainties persisting around the world. In this report, we will be looking into the US weekly production figures and the OPEC's monthly report that was released in the past days. The information released could be crucial for traders looking to form an opinion for the medium to long term, while the possible impact on WTI's price will also be considered as a form of personal opinion, however. In the previous days, the American Petroleum Institute released its third consecutive drawdown of minus 4.4 million barrels, and WTI's price moved higher in the following hours, reaching $42 per barrel and stabilized nearby. Yesterday, the EIA weekly crude oil inventories also released its third consecutive drawdown, with the figure being at minus 4.5 million barrels. No major reaction was noted upon release, yet later in the American session, the commodity moved higher and stabilized above $42.50 per barrel. Both readings, combined with the EIA short-term energy outlook, stating global petroleum demand continued to pick up in July, tend to support WTI's price. On a separate note, the OPEC monthly report also provided some interesting information. According to the Organization of Petroleum Exporting Countries, global oil demand growth is forecasted to decline by 9.1 million barrels per day in 2020, 0.1 million barrels per day lower than the previous month's estimate. Yet for the next year, 2021, OPEC kept its forecast for a rise of 7 million barrels per day unchanged. In the report, it was also confirmed that during the second quarter of the current year, major oil firms around the world saw a tremendous reduction in supply due to the COVID-19 outbreak. It was also stated that global crude and product trade remained lower compared to last year. Referring to the global economy, OPEC found that the virus still poses a threat. As for the US production, uncertainty surrounding financial and logistical constraints persist. U.S. crude imports decreased in July as the long-haul tankers from the Middle East were not so active. On the contrary, U.S. crude exports increased in July after 4 consecutive months of declines, averaging 2.8 million barrels per day, yet still remaining lower than the pre-pandemic levels. As expected, China's crude imports rose to a record high of just under 13 million barrels per day in June, as the Chinese mainland seems to have taken advantage of a number of crude cargoes carrying oil at rather low prices and continued to unload. Very importantly, OPEC revised its own crude demand outlook downwards compared to the previous month, saying a decrease of 0.4 million barrels per day to a total of 23.4 million barrels per day could be made. As per OPEC's crude oil production, the group saw an increase by 0.98 million barrels per day in July to average 23.17 million barrels. As a conclusion, even though the commodities pricing action has been limited, the slight increase in price implies that economic activity around the world continues to recover, and in some economies is better than expected. Thus, a rise in oil prices is justified, and if the virus outbreak stabilizes or an effective vaccine is confirmed, prices could see a dramatic increase as supply continues to be in a decline. Those were the fundamentals for the commodity. Please stay tuned for the technical analysis. Welcome back everyone to our technical analysis. This is WTI 4-hour chart. However, we would like to start with a comment for a monthly perspective. Looking at the chart from a monthly perspective, the commodity has moved higher in all months since May 2020. For this reason, we have evidence to support a bullish outlook. At the moment, WTI is trading nearby 42.80 per barrel. If the commodity is to move even higher, it could initially engage and test the R1 43.45 level that was last reached on the 5th of August but not breached. The levels that could be the next targets if WTI is overtaken by a buying momentum are the R2 46.20 line and the R3 48.50 hurdle. In the opposite direction, a possible move lower could send the commodity down to the S1 41.30 level last seen on the 7th of August. Yet, if WTI is to head even lower, then the S2 39.50 level last seen on the 30th of July could come into play. Finally, a breach below the S2 line would signal a change in our outlook to a bearish one, and it could lead the commodity even lower to our S3 37.25 line. The RSI indicator below our chart has stabilized nearby 60, possibly implying the bulls are in control for the time being. Now that's the end of this report. We hope you enjoyed it. Thank you very much for your time, and enjoy solid trading.